Returning to our channel, welcome. We'll talk about how many Tesla shares you'll need to be able to live off of the money your shares generate passively. We recently looked at how many pre-split shares you would need to retire, but since then, a lot has changed. Elon is now facing a barrage of criticism from all sides, and the future of Tesla appears to be somewhat uncertain. Nevertheless, this is good news for those of us who still believe Elon will succeed, because it means we can spend less money to reach the magic number of shares needed to retire. To learn more, keep watching, and don't forget to subscribe and like. We'll concentrate on long-standing supporter of Tesla Cathie Wood's bear argument in the most extreme worst-case scenario in this video, and I'll show you the many advantages that Tesla has that will probably make the bear case scenario overly cautious. According to the bear case, 10 million cars will be sold for an average of $38,000. This would bring in $372 billion for AutoZone instead of the expected $380 billion. Although the 10 million figure is merely an estimate, it's noteworthy that Tesla's robotic taxi services are not included in this figure. It's absurd that the robot taxi, also known as the autonomous riding vehicle, is valued at $51 billion. The fact that the gross margin on electric cars is 46 here, as opposed to 28 in the Q3 figures, is even more impressive. By 2026, the gross margin is a ridiculous 50%. The entire EBITDA margin is a staggering 37%, being that while efficiency was just over 23 in the third quarter, they anticipate reaching 37 by 2026. That's crazy, but I'm interested in learning how they determine the enterprise value for 2026. Since we typically determine the enterprise value in the present, the ability to compute the value all the way to 2026 should raise some warning flags. Do I agree that by 2026 they will deliver 9.8 million vehicles? They already have the numbers for how much cash and debt they will have, at least in my opinion. It can be excessive. Let's see how things pan out in the future. According to other forecasts, there will be at least 7 million in 2026. Cathie projects a $50 gross margin, which would result in revenue close to $250 billion. Using enterprise value by EBITDA rather than operating margin or expenses, ARK was able to defend the stock price of $967, which is $2,900 pre-split based on total gross profit after costs in the woods. We'll find out how they arrived at the Tesla stock price and market value of $3.3 trillion by 2026, though, as enterprise value has to know how much cash they owe by then. In summary, Cathie Wood's bear case states that $2,900 per share pre-split, which would equal approximately $967 per share, and then an expected value of $4,600 per share by 2026 if they're doing 50 gross margins. An operating margin of 30 seems pretty fair by that point. In order to attain a secure retirement amount, which according to a recent survey is $1.7 million per person, you would need 108 Tesla shares after post 3-for-1 equity split, which would be $15.33 per share. The worst case situation is that, as of the recording, 1108 Tesla shares are selling for $123 a share, being that investing roughly $136,400 today would get you to that magical amount for retirement insurance. It's not that horrible. Let's now examine current market patterns and why, in my opinion, the bear case is much too cautious given these developments. After experiencing several highs and lows, Tesla is currently trending lower. This is unquestionably a great time to buy Tesla stock, depending on the stock's trajectory and how well it navigates this market. Assuming you invest in Tesla stock, given its market potential, how many shares do you need now to retire in 2027? Tesla has had multiple dips and is likely to have more, but based on stock potential, the dips are expected to be minimal. The question is whether or not Tesla can reach a high price in 2027. Whether Tesla is an excellent stock to buy or not, the numbers will lead us to believe that this could be an excellent time to buy in the stock for the future. Let us not forget Tesla's performance has single-handedly led us into several bull markets, and even then some analysts believe Tesla to be overvalued. The EV brand has partnered nowadays with other companies like Lucidrivian and Needlelock and has expanded into different markets that increase production and boost its market reach forecasts from while investors put the stock price at over $2,500 by 2025 and famous people like Cathie in the future. In the last 2 years, Tesla has significantly increased its production and delivery of cars, recently topping consensus estimates after the company delivered 108,600 vehicles in the most recent quarter, Even though most workers look forward to retirement, only a minority of retirees put in the work required to maintain above-average security of finances in older life. Let's do some calculations again. A recent survey indicated that the average person needs about 1.7 million to retire comfortably. Using a slightly more optimistic scenario about Tesla than Cathie Wood's bear case above, how many shares of Tesla would you need in your portfolio to retire in 5 years if you invested your money in a high-value stock with a good growth potential? At the present pricing of Tesla, you will only need approximately 104,000 shares of stock if the price of a single Tesla share hits $2,000 in 2027. If Tesla lives up to expectations, which we really hope it does, you may make a sizable return. When Tesla first started, its CEO, Elon Musk, stated that the company's main goal was to create a high-performance vehicle, and then use the profits to create a more affordable vehicle, and then use those profits to create even more affordable vehicles, while also offering zero-emission electric power generation options. These are just a few of the exciting projects from Tesla that could propel the stock to a high price in the future. According to Musk, the humanoid robot project may eventually take precedence over the automotive industry, and may even lessen the need for physical labor, which would be advantageous for companies as it would cut labor costs. If successful, Tesla's Model 2 project has the potential to significantly impact and elevate the field of artificial intelligence. Nonetheless, Tesla bulls remain vigilant about any potential updates. According to Musk, the Cybertruck manufactured by Tesla might be available for purchase in a few months. One of Tesla's issues was that it was unable to produce enough 46A battery cells from its initial 2021 objective to meet the Cybertruck's lane production needs. It's good that building on the truck started in 2022, because he also stated that production wouldn't start until the Texas Gigafactory started making the new model. Fans of Tesla are eagerly awaiting the 2023 release of the Cybertruck. By stating that Tesla will complete the Cybertruck's development by year's end and have it prepared for production by 2023, Musk has validated this. Tesla has declared its goal to produce self-driving taxis. The Tesla-designed roto-taxi is expected to feature some top-notch features. The car will be extremely comfortable for its occupants and built for various uses. Not just Tesla enthusiasts, but also anyone who enjoys innovative and creative projects may find this to be an exciting undertaking. This, together with the fact that robo-methods are designed to offer the lowest cost per mile of transportation yet encountered, may establish them as the next big thing in commercial transportation. Elon, the CEO of the firm, understood that although renewable energy sources like solar and wind could help clean transportation, the project's high battery requirements would be difficult. Tesla will be well ahead of the competition if it can figure out how to generate electricity from renewable sources. With Tesla's growth stock projected to remain at the top of the market for some time, and the company's arguably established industry reputation, researching an investment in a growth stock could be a solid retirement strategy for 2027. While many people aspire to live worry-free in retirement, very few actually take the necessary actions to make that a reality. Even after retiring, a lot of people still need to have a retirement plan. Inflation has affected the previously adopted 4% rule, and contrary to popular belief, your needs do not decrease once you retire. However, this is not true for everyone, so it's essential to plan for the future by investing wisely. Based on your annual cost, this will determine how many Tesla shares you need to keep yourself financially stable after retiring. Let us know what you think in the comment section below. Previously, your only options for retirement were your employer's 401k or an IRA. However, given the recent changes to the guidelines, it is clear that these can no longer be relied upon. Give this video a thumbs up if you found it helpful, and if you're new to our channel, click the subscribe button to receive notifications when we post new videos.